Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup as well as the market strategies that you need to follow for this fresh and new week. Let's start off by understanding what happened last week, and thereafter we'll of course come to our top guest to understand what should be followed for this new week as well. Remember, this week the Nifty begins the second week of September with a lot of hope. A hope of a potential thaw between the currently frosty ties with the US, that is over the 50% tariffs that have been imposed on the Indian exports after US President Donald Trump has said that there is nothing to worry about. Almost soon after from the Indian side as well. So we've seen President Donald Trump calling Prime Minister Modi a great Prime Minister and insisted that ties are special. Prime Minister Narendra Modi has also reciprocated warmly to the President Trump comments and also has reciprocated the same way on Twitter as well. Now remember, this statement of Donald Trump comes right after his post about losing India to China. Now remember, US equity markets following this, they settled lower on Friday, and we've actually seen that the investors have been weighing the weaker than expected jobs report, raising some worries about the speed of economic recovery, and therefore we did see the S&P 500 index fall about 0.3% in trade. The Dow Jones Industrial Average about 0.5% lower. Nasdaq falling just marginally in trade on Friday. There was a solid miss on the US jobs data. Of course, it was a hugely, the consensus was around 75,000, but it was greater than 22,000 on that consensus as well. That's reinforcing the case for Federal Reserve rate cut and the FOMC meeting that is going to be taking place on September 17th is going to be even more important to watch out for now. Seems like most of the consensus is that a 25 basis points cut is a given right now. What's happening in the Asia markets this morning? We have seen them open in the green as investors await Japan's final GDP numbers for April to June quarter. China's August trade data scheduled to release today, and investors will also access Japan Prime Minister Shigeru Ishiba's resignation announcement over the weekend as well. So last check, we've seen Japan's Nikkei index down, up by about 1.5% in trade. We've seen China just slightly lower, but Hang Seng Kospi also higher in trade, and the Gift Nifty is also indicating to a positive start. A minute to go before the pre-open trade comes in. Let me welcome our guest on board. Mr. Dharmesh Kant is with us on the program to help us understand his market views as well from Chona Securities. Warm welcome to you, sir. Thank you so much for taking the time out. Your thought, we've seen some big bang announcements last week on GST Council, and of course, over the weekend, a slew of announcements were being made by the auto industry that they are passing on the full benefit to the customers. How are you looking at that? Just meanwhile, marking for all our viewers, it's a flat start on the pre-open, 24,769. We'll continue to watch out for it. Please go ahead with your comments, sir.
Yeah, good morning, Sakshi, and good morning to all of viewers. The comments, all the proposals which rolled out, be it the GST and thereafter the corporates, taking action very fast on that. Especially the automobile companies have already came out with announcements where they would be going ahead with the GST rate cuts, and the prices would be marked down significantly starting 22nd of September. So these are all, positive news flows, and basically it helps the sentiment to boost up, and that is what the intent of the government was, because they have already done, direct tax cut, then the interest rate cut was already there in the system, and now this GST rate cut was also been done to get the disposable income higher, at the same time the sentiment to and appetite to go for the consumption. So I think this will definitely, is timed right at the start of the festive season. So this will definitely go in for some increase in the appetite. What has to be seen is the carry forward of that into the month of November and December. So that is yet to be answered. But as of now, looking at the things how they are shaping up, October is likely to be a very good month for all this consumption plays, specifically in the consumer durable plays, and there will be a drift in the stock prices going forward. So you would see amidst volatility, the prices are likely to inch higher, and maybe on a blanket basis, say 10 to 15% kind of an upside is likely on all the consumption durable related stocks, be it auto ancillary or consumer durable plays like AC manufacturers, washing machine, TVs, and all.
Okay, got that. So, Dharmeshji, help us understand, should one tilt their portfolios towards a lot of consumption-oriented themes now? Is that the way to go about, at least for the remaining part of the calendar year, with big boost expected across the board, like you've highlighted? What about those people who have had, probably their portfolio skewed heavily towards the core economy-oriented stocks and banks, for instance? How should they be really realigning their portfolios with the new order?
Yes, actually, that's $1 billion question and a lot of catch out there. So tactically, as of now, if you are sitting from on some money on the sidelines and you are going in for a trading play, and that's a fundamental trading play for say a couple of months or so, then that allocation should be given to the consumption pace. But as far as a long-term investment play of 1 year and 2 year kind of a time horizon, I still believe that the core infrastructure and core economy related stocks and themes which were darlings of the market in last 1.5 or 2 years is likely to be so going forward, and there the consistent compounder will be defense related themes, all the defense manufacturing companies, be it HAL, BEL, or BDLs of the world, they would continue to do well. Some EMS plays are likely to do well, going by how things are evolving, particularly with improved trade relation with China. So a lot of business clearances are likely to come from the Chinese government for the Indian counterparts, and then the business will take its further upswing. And building materials plays like cement and metals are also likely to be there. Section which has not done well was the infra space for last few, I mean, almost 8 9 months. Though the numbers were very much on the line. So finance minister has reiterated that the budgetary spend which was promised by the government in the budget gone by is well on card, and they will be finishing their targets by the end of this fiscal year. So there, I think a time to have a relook and a renewed spending is likely to be there. The numbers were excellent for last year in October. I mean, 33% kind of order book inflow growth was there, 30% PAT growth was there. There was slight dip in the EBITDA margin, which is likely to overcome by now with this low input prices going down. So LNT and NCC can be looked at. So these are the basic themes which we are still, recommending our clients for a long-term perspective. One sector which we are not recommending as of now, it's likely to underperform, is the BFSI space, particularly because there will be reversal of some treasury incomes which they have booked, and we have to see how these congestion fees adds into the new retail loan growth. So that we are not very confident about as of now.
Okay, fair point. But specifically talking about, the banking space at large, Dharmeshji, what kind of benefits do you see for this space? Because with the rise in consumer demand for consumer durables for the auto sector at large, we are hoping that the credit demand could also see an uptick for this festive season. How are you looking at that? And within the banking, NBFC, PSUs, privates, how are you choosing some select spaces then?
Yeah, I mean, the overall NBFC would be a better off than the pure banking place because the consumer durables are the ones, especially the low ticket prices like washing machine, TV, fridges, and all. Those are primarily served by all the NBFC space. So I think there the traction would be better than the banking place. So first, let's segregate what's going to happen with the banking place. Banking space, I think, be it private or public sector bank, there would be some contraction in the NIMs going forward into Q3. At the same time,
Yeah.
the advances growth would be I mean, high single digit. There would be a great advances growth out there, and there is some concern on the asset quality. So, and other income gets reversed. So that's problem stays out there. NBFC on the other hand will be having a lower cost of fund because of the drop in the interest rates. At the same time, because of consumption spurt coming in, so Q2 numbers won't be great, but the market is forward looking because of this October season sales, which news will keep on trickling in. NBFC is where you will find more traction, and there I think the top pick remains Bajaj Finance, so which is pan India present and aggressive on their stance. So the earlier concern about the two-wheeler loans and vehicle loans not doing well can get addressed going forward with one more interest rate cut coming from RBI, which we think is likely on the cards as well.
Absolutely. Let me also just ask you, Dharmesh ji, when it comes to specific stock ideas from these themes that we are understanding, we do know that across the board in autos, the benefits will be passed on to the consumers, and hence we are expecting the sales and the volumes to really pick up there. Where do you believe the investors should look forward to? Two-wheelers, or should one look at the passenger vehicles at large there? How should one be really approaching, the key stocks? Within the auto basket.
Sakshi, I mean, there will be traction across the board, but primarily on the, a mass segment kind of book size. So, be it say Maruti, Hyundai, or, Tata Motors, all will see traction. At the same time, in the two-wheeler space, Motor TVS will see good traction coming into play. Even Eicher Motors will have some traction coming into play. So 85% is below 350 cc, so there the traction will be there. M&M, because all the verticals, be it SUV segment, I segment, or the farm equipment segment will continue to see strong traction going forward. But valuation wise, if you ask me what are the, in the pecking order, there I think Hero MotoCorp is still, reasonably underpriced when compared to say a Eicher Motor or TVS or a Bajaj Auto. So there think the traction is likely to be far better in the stock price. And if you want to have a hedge, you can also have a TVS motor coming to play. M&M will continue to fire up, though it's now getting a bit expensive. But markets are known for excesses, so 10-15% kind of upside move like going into the month of October, November is likely to be there for M&M as well. And Tata Motors, I think, is a wild card out here because they have lowered their prices across the ICE vertical. And I think the stock price has been reasonably beaten down. So, as a value catch up play, Tata Motors is looking much better to us as compared to, say, a Maruti or a Hyundai.
Okay, got that. Let me actually look at some of the key stocks that have settled in the pre-open trade and the markets as well, and then we'll come back to our broad discussion with Dharmesh ji. Viewers, 24,802. That's with us as far as the pre-open rate is concerned. It's settled 60 points higher. Metal stocks are actually showing us some ticks on the higher side. Tata Steel, JSW Steel could be in momentum. We're also looking at the real estate pack, autos, metals, all three of the indices, sectoral indices that could be hovering higher. We'll also look at how the mid and the small caps also perform. Remember, these spaces also started to pick up some pace over the last couple of weeks. So that's also something that we will continue to keep an eye out on. Dharmesh ji, when it comes to the broader markets, how are you looking at mid and small caps right here? Do you find any confidence of returning to them on a big way, or do you still find confidence in the markets with the large caps itself?
Sakshi, I mean, large caps is the theme because what we are seeing right now, which we are likely to see in the month of, say, October or half of November, would be a pop-up of just a pent-up, sentimental pop-up. The continuity of that is still under, study. So we are not very confident that these entire measures are likely to pick up from October and get carried forward going into the next financial year. So that is not there. So we are avoiding mid and small cap stocks on a blanket basis. However, there are certain plays which looks attractive in the space, maybe from the auto ancillary space. So for example, Motherson Sumi Wiring looks pretty attractive. Jamna Auto looks very attractive. Even JVM Auto, for that matter, is pretty nicely placed. So those are the companies which you can look forward to, and some of the power sector and renewable energy segment where things are shaping up well. You can look forward to even metal plays. There are a few companies which are in the mid cap basket. One can look forward to them, but you have to be very stock specific, and it should be a bottoms up approach rather than a top down approach when you are approaching mid and small cap basket.
Okay, fair point. Viewers, let me just mark out a few stocks that you can keep an eye out on today before the markets open. Let's start off by talking about Vedanta first. Remember, the mining giant has successfully bid for the debt-ridden Jayaprakash Associates and has proposed an upfront payment of 4,000 crores after receiving the NCLT proposal and the approval there. Remaining amount is to be paid over the next 5 to 6 years. Aurobindo Pharma from the Pharma Pack is also in focus today. The company has announced that its US FDA has concluded its inspection of the Unit 7 facility in Bachupalli in Telangana, and has issued a Form 483 citing 8 procedural observations. So that is also going to be in focus. Adani Power, that's announced it has entered into an agreement with the Druk Green Power, a Bhutan government-owned entity, to develop a 570 megawatt hydroelectric power project in Bhutan. So that's also going to be in focus. SpiceJet from the aviation space is in focus. The company has posted a net loss of 234 crores in Q1 as against a net profit of 158 odd crore rupees in the same quarter last year. Revenue has also declined by 34%. BHEL from the PSU basket is in focus. The state-owned engineering and the manufacturing firm has entered into a 10-year exclusive MOU with Singapore Horizon Fuel Cell Technologies to jointly develop a hydrogen fuel cell powered rolling stock in the Indian market. So keep that stock also in focus. Dharmeshji, quickly asking you on Vedanta first. How are you looking at that? Will this further escalate some issues when it comes to the deepening debt of the company, and how would you look at Vedanta, at least at this point in time?
Yeah, great company, great value in the business. Everything is fine. Great operating cash flows with operating margins holding on. But the problem with the Vedanta Group is the cash flow management and the policy regarding that. So dividend payout is far higher. Dividend is what goes into your home, but debt sits on the balance sheet. And in a down cycle, it hurts both on the interest part and the principal payment part, which has been the case earlier with Vedanta as well. So that is one bone of contention out there, and that's the reason why you don't see stock prices moving up. Though the dividend payout partly compensates the equity exposure into that. This development we are not looking at very positively, because there would be three, four more new verticals being added to their already existing five, six verticals out there. They are demerging the businesses as for the scheme going by. So, and these are new businesses. The management doesn't have any expertise of carrying a say a power business or real estate, for that matter. But even cement business is a new vertical for them. So how things are going to unfold, how much more money they have to pump in, will definitely be play on the minds of the investors. So we are going with more of a negative bias. And only thing is, if management can give more, sustainable clarity, no back and forth going forward as to how the business is likely to be shaped going forward 5, 6 years down the line, is what can re-rate the stock. Otherwise, I think it will be more of a neutral to a negative kind of a rating for Vedanta among the investors community.
Point. So neutral to negative, that's the view as far as Vedanta is concerned. We'll actually come to other stocks as well, but let's quickly shift focus to the market opening. A minute to go before the markets open. Remember, viewers, you'll also keep an eye out on a whole host of other brokerage houses updates that are also coming in, that we'll just highlight for all of you, where you can keep an eye out on. And of course, remember, this is also one week where a lot of IPOs are coming in. So in case you are a primary market enthusiast, keep an eye out on that as well. For the brokerage houses updates, I'm keeping an eye out on Samvardhan Motherson. Jefferies has come out with a buy rating and a target price of 110, as the company has outlined ambitious gross revenue target of $108 billion by FY30. Now, Swiggy is on radar of Nomura. It has initiated a buy rating with a target price of 550. So that is also in focus, as the profitability path is now seeming encouraging for this one. CEAT is in focus on Nomura. Again, it has a buy rating and a target price of 4,037. The markets have started to take 24,820, 79, 80 points higher now in trade. All the sectors open into the green, despite the fact that India VIX is also up by 1.8%, viewers. Metals are shining bright, over 1% gains coming in here. Real estate also up by 0.8%. Autos, IT, that's also on the move. Look at even the broader markets, mid and small caps, that's also on a upward path. Now let's look at the markets when it comes to the key stocks on the Nifty. JSW Steel is higher by about 3.5%. Tata Steel is higher by about 2%. M&M Tata Motors from the auto pack, both of them have already talked about passing on full benefits of the GST rate cuts across the models, and therefore you see some reaction coming in onto that. From the IT pack, it is Wipro that's also rallying. Infosys is also on the move. Are there any losers on the Nifty? There are three losers that we find right at the open: HDFC Life Insurance, Kotak Mahindra Bank, Nestle. These are the stocks that are dragging in trade. Even the PSU stocks are higher. Oil marketing companies, HPCL, IOC, BPCL, they're all up. You can also see names like HAL from the defense pack, that's higher. BHEL, BEL, all of them are also moving up in trade, at least for now. Let me also highlight, okay, I think private banks are slipping a tad bit low in trade. Dharmesh ji, how do you see the opening?
Opening is nice and decent, and I think it will remain like this. You won't see a flying market going forward. I mean, at least for next couple of weeks, until some clarity emerges on the tariff thing from the U.S. government. So that sort will continue to, get the market into some jitteriness. So that is there. But sector-wise, stock-specific wise, you have pointed out most of them are doing well, and that is likely to continue doing well from the auto space, defense space, and a few NBFCs and metal space will continue to see traction going forward.
Okay, got that. Let me also ask you, Dharmeshi, when it comes to the metals pack, how are you looking at the entire metal move right now? It has been picking up some pace over the last couple of weeks. Is there structural, shift that's taking place, or is it still very cyclical? How are you approaching this one?
It's a cyclical, play on the metal basket. It's not a structural shift because commodity at large, I mean, 1.5 to 2% is the volume growth for the last 10 years, be it whichever metal you look at. And metal prices internationally, except copper, nothing has seen a great traction. Even steel prices are down in the international market to a great extent. And same, aluminum has been quite almost 1 or 2% kind of a gain year till date. Domestic prices has been holding firm because of the investments by the government. There we are seeing traction. And one stock which one can look at from a positional, tactical, as well as some strategic perspective is Hindustan Zinc, because the silver prices have gone up significantly higher, and 50% of the silver is also used for industrial purposes, where EVs are playing a great role as well as renewable energy like solar power. So all the solar panels, solar cells have a silver wiring coming into play with EMS and EVs also there. So I think this is one company which is fairly undervalued, and though in the same stable of Vedanta Group, but there we see a good value proposition shaping up. Otherwise, pure plays like JSW Steel and Hindalco can also overwhelm. But again, Sakshi, this is just a cyclical play coming into the focus rather than a strategic shift as you were talking about.
Okay, fair point. Now, Dharmeshi, when it comes to some of the other spaces, real estate, how are you looking at the real estate basket? Do you think this time around, because of the allied sectors getting the benefit of GST, say cement space, we're also keeping a clear eye out on the construction space and the real estate space at large. How would you look at this core basket of the economy?
See, real estate, if you are buying because of their margins or will improve slight because of lower input prices, I don't think that is the basis or should be the thesis of buying a real estate place. You have to buy the real estate place based on the demand and the kind of appetite which people have for buying housing projects. So there, I think all the premium and luxurious properties have already moved up. All those plays have through. Now the plays are more on the affordable segment side because the interest rates have come down significantly and disposable income in the hands of people has gone up. So some of it will be diverted to affordable segment space as well. So how we are playing this theme is we are not buying real estate companies who are there into affordable housing as well, but rather play it because 80% of the movement has already happened in most of the stock prices last 1.5 years. So you buy it through NBFC. Housing finance companies, and there I think Aadhaar Housing Finance, LIC Housing Finance, BNB Housing Finance looks pretty attractive. The type of compounding CAGR they have given on their AUM growth and the valuation multiples they are sitting on pretty cheap. Especially LIC is Housing Finance is available at less than one time price to book. So these are the places where I think decent money can be made if one is stayed invested for say 6 to 9 months going forward.
Got that. Dharmeshi, before we let you go, could you help us understand any key stock ideas that you may have devised for all your clients at this stage in time? Any newer stocks that you would have come to, focus on after the recent reforms that have taken place?
Yes, actually, I mean, fortunately, we were driving with the autoplay 3, 4 months down the line. So there we have got maximum traction coming into play. But going forward, I think auto ancillary is one area where one can look at, and the NBFC space. So auto ancillary, as we spoke about earlier, that Jamna Auto, Motherson wiring at Uno Munda looks pretty attractive. Though Uno Munda is expensive, but still we think there will be some tactical plays setting in. And we are continuing with the auto thing. We are holding on to the buy position. We are not, booking profit out there. So these are the two themes which we are focusing on. Rest we'll see how things evolve. As of now, we are sitting with the core, economic plays. There has been no change in tactics out there.
Okay, fair point. Dharmeshji, thank you so much for being with us then on this special program and helping us with all your insights. It's always so good to be speaking with you. Hope you have a fantastic week ahead. We'll see you soon.
Thank you so much.
All right, viewers, what we'll do is we'll now welcome another guest on board. Brijesh Ale is now joining in to share with us the technicals and, of course, how you need to trade in this week, both on the indices front as well as certain sectors and stocks. So let's welcome Brijesh, on the program. Warm welcome to you. Good morning to you, Brijesh. Your thought on how we have opened up this week. Yet again, the attempt is to go beyond 24,800. The big question has been whether these higher levels will sustain. We have seen all through the last couple of weeks, even despite such big reform announcements that have come in, markets are unable to sustain at higher levels. So how are you looking at this fresh and new week? And especially with one more positive that's coming in, that seems like the ties have not broken yet between India and US. Both the top voices of both the countries have actually come out and said that, there is nothing to worry on that account. Will that give some sense of comfort to the market, and therefore will the higher levels be able to sustain?
Uh, yeah, morning, Sakshi. So I believe the index has opened flat, which is 30 for 35, 40 points opening is just a neutral opening. So, but somehow the last week closing was positive. The structure was positive. Though it was we had a very stiff kind of a move, but then the close was quite good. So my understanding is that the Nifty, there is a very high probability that Nifty will make an attempt to test the higher levels of this 45,000, 45,200. So this is the bet which we are taking as of now. And at the lower level, 24,600, 24,500 is the decent support zone. So it is going to be more of a range bound kind of a market. And the buyers, maybe from the technical perspective, I do understand that. See, why I'm saying this because from the derivatives point of view, there has been a long build-up. And entire during the last week, all the five trading session, there was a long build-up. So that was equally strong. So I think somewhere the charts are in the oversold zone, and one leg of bounce will be come. On the bounce, whether it will sustain or then the follow through rally will come. We'll take a call at that point of time. But then at least from this point, 24,760, I will be waiting for 25,000 on the Nifty as a cash level. So that would be my immediate view on the Nifty. Same thing goes for the bank Nifty as well as because in the breakdown. In Bank Nifty, the breakdown came from the level of 55,000. So I do believe that Bank Nifty is also poised for at least 1,000 points rally. So this is a very small trading kind of a setup. We played this move once. There is success in this move, then we might take the further step. But at least some bounce is what I expect. I can see in the market.
Okay, Brijesh, let me highlight for all our viewers, and maybe you can give us some insight as to what's happening in the broadest index. So many of the stocks that are actually buzzing in the broad index as well. Names like Moschip Technologies, NetWeb Technologies continues to surge higher, 6.5% up. TBO Tech is also hovering higher in trade. You're looking at Prime Focus, another 10% rally on this one. Remember, viewers, on Friday there was a block deal that took place, and we are given to understand that a lot of market veterans have participated in that block deal. The likes of the funds of Madhu Kela, Utpal Sheth is what we are given to understand. So all of those have participated, and Prime Focus continues to rally. MIC Electronics, that's another one that's on the move right now. We have a slew of such stocks that are on the move. Let me talk about a few stocks from here. Let's start by talking about NetWeb Technologies. 6% higher, 7% higher, another one today. Remember, in the last 5 days already, the stock has moved up about 40% for NetWeb Technologies. So let's pull up that 1 week chart, and our viewers will be able to understand what has really happened here and what should be the course that one has to follow for NetWeb Technologies from here onwards. Brijesh, how have you assessed NetWeb Technologies? It's been rallying for 5-6 days straight away. It's already rallied about 40% over the last couple of sessions. How would you explain, a move that continues to gather, and a lot of investors are now feeling a FOMO?
Yeah, maybe because an all-time high level is taken up. So definitely the structure would be positive. But having said this, we can't make a fresh entry. So the advice would be somebody to already having a position should ride the momentum, maybe taking some partial profit booking, and then that would be the wise decision. But then the undertone is bullish. So this I think this may go back to another 15-20% on the higher side. So the structure is definitely positive. If I had a position, I would have taken some to done some passive profit booking, and I would have ride the momentum. So the view would stand positive. We'll talk about another 15-20% from this level.
Okay, fair point. Let me also um, try and understand from you some of the other stocks that are buzzing. TBO Tech, that's on the move, about 7.5-8% higher in trade at 1659. JP Power, Adani Power is also on the move. Any suggestion on the power stocks right now? The entire power space seems to be in action right now, Brijesh. What's catching your attention?
I think specifically JP Power is looking good on chart. So it has been now getting about this 20 level. So and previously the supply came from 24 level. So maybe another 2 to 3 points kind of a move from the directional point of view can be there. Maybe in next 2 3 months this JP Power can go back to this 24 half level. So the structure is positive. So somebody is having a position can continue to hold the long put, right? And this level of 18 will be the stop loss. With that as a stop loss, I think maybe in next 2 to 3 months, this 24 half can be the level which we can see in JP Power. So I think the power stocks are looking good on charts.
Okay, let me talk about Ola Electric as well. 4.5% of an uptick that we can see on Ola Electric today. This stock has also, rallied quite sharply over the last 1 week as well. Remember, this was a stock that was hugely underperforming, lagging quite a bit, negative news flows impacting the sentiments all across as well. But this stock has started to move. Let's actually show, the 1 week move will be not proper. I think 1 month move will be a proper one to look at for this one. 56% of a rally is what we've already seen on Ola Electric. So there's been a sharp rebound from the lows that it had recently hit. Brijesh, do you find confidence in Ola Electric? I also believe there's a brokerage report that our viewers should know about Ola Electric as well. There are targets of even 72 odd coming in for Ola Electric now from some of the brokerage houses. Yes, we have a Goldman Sachs report on Ola Electric with a buy rating and a target price of 72. They believe the Asia conference takeaways have displayed that the Gen 3 scooter platform and the improving service infrastructure should support the steady state of market share goal of 30 to 35% in India's still young electric two-wheeler market. The company is committed to in-house cell production, but is also focused on 5 gigawatt, rather than 20 gigawatt of the capacity right now. They're also looking at an EBITDA break even on the auto business expected during the course of FY26 alone. So those are some positive updates that are coming in from brokerages as well. Brijesh, your thoughts?
Since actually the last week, the high which we saw was 71, and from those levels, the close extremely came down at 60 level. So I would, and there from technically, it looks like there was a long break. So basically, whenever this kind of patterns are there, it suggests that at higher level the profit is coming. So I would be having a cautious view because again closer to that 71, 72 level, I think this will see some kind of sell off or maybe some profit booking. It would be very difficult to say whether it will go back to because see previously the resistance came from the level of 100. So I'm not very confident whether this will go back to 100 or not. For me, I think I will again look to do some profit booking or maybe somebody who's bought at those 30, 40 levels. I would like to say that the closer to 71, 72. try to take some profit because see the way the stock is rallied in the short term time frame, it's a 1 year rally and it looks like they are in the open zone. Any one small negative news can trigger it back to the corrective phase. So I would be very extremely cautious. Things will improve maybe after a year and so. So right now, if we're taking a bet, somebody who's having an extremely long term bet and doesn't want to play this trading opportunity can hold on to the long trades, but then. With a very short term time frame or maybe somebody who bought lower, I would advise to take some profits near 70, 75 level maximum. I think again, the structure says that there can be some like a profit booking at high.
Okay, let me bring up another top mover, that's prime focus, Brijesh, for you. Now we do know, like I was mentioning, a clutch of market veterans from Ramesh Damani to fund owned by Madhu Kela and Utpal Sheth. They were buyers of prime focus in the shares that were sold on Friday, the block deal that took place. According to some data that we've got from the exchanges, Ramesh Damani has bought 8 lakh shares of prime focus priced at 142. Right now the stock has jumped to 174 because of back to back rallies that we've seen. Utpal Sheth bought 17.5 lakh shares at the same price as well, and we are also looking at the fund that is owned by Madhu Kela has bought 62.5 lakh shares in the block deal as well. How would you look at prime focus? Already in the last 1 week a 23% rally that we have seen on this one, and what should that mean for all the retail investors who have again come to look at prime focus?
So Sakshi, what I can see and from the weekly chart, what I can make out is like this level of 140 has stood as the very strong demand zone. So that was the level from again the buying took place. So now it's already a gap up and it's trading about 174. There can be some profit booking and this gap will be filled in the near term. So whenever this gap gets filled, somebody wants to take the back. So that area is specifically 158 to 160 level. So whenever it comes to 155, 160 level, one can try to take some long bets and the stop loss for the same would be 140. Below 140 would be the stop loss and closer to 155, 160, that would be the range. I think that will, so maybe sooner or later because that is a gap. So I believe this gap will be filled in the near future. And whenever that gaps, the prices come to fill the gap, I think somebody having a long-term bet can try to take the long trades at those long levels. So view would be positive.
Okay, fair point. Let me just highlight for all our viewers all the 52-week highs that we are seeing right in the morning trade after the first 15 minutes of the candle is out. You have GMDC, that's at a 52-week high, 5.5% higher. Look at Acme Solar, that's up by 3.5%. Netweb Technologies, that's up by 3%. Tata Steel, that's up by 2.5%. You have M&M, that's also rallying by 2% odd. JSW Steel, TVS Motors, these are all the stocks that have hit 52-week highs in today's trading session as well. Brijesh ji, anything that catches your attention from the 52-week high stocks where further momentum can now be seen?
Yes, I have a two to three stocks. I think the GMBS is one which is very clearly getting up in momentum. I think from the level of the 530 level, this can easily trade another 10-15% higher. So that momentum will be there in GMDC. One more stock which is coming in the radar is the Suntech Realty. This is also something which is given a very strong breakout in like the last Friday session, and that I think that breakout is a very strong volume breakout. So that continuation of the trend will be there. So Suntech is something which I think will keep moving up. And besides this, metals is some space where I think the strength is there. So I think the Tata Steel and SAIL are the two stocks which I would like to have a long position. So whenever there is a small minor correction, Tata Steel and SAIL would be the buying opportunity.
Okay, got that. I hope this has also given a lot of understanding. Any stocks on 52-week lows that we can spot in today's trading session? Only Deepak Nitrite, I believe. That's one stock that is declining in trade, but we have a lot of stocks that are active in 52-week high stocks where there's volume action can also be seen as well. Food delivery space, let's look at that. Swiggy vis-a-vis Eternal. I think that's a good one to look at as well. Brijesh ji, again today we are looking at a lot of brokerage houses come out with fresh reports on Swiggy. Nomura has initiated a buy. Target price that they're giving is 550. That means a considerable upside even from the current levels of 444 that we are looking at here. How are you looking at the opportunity between Zomato and Swiggy right now, and where do you think a better choice can emerge?
Yeah, I think we are also positive on the food delivery stocks, and the structure for the Swiggy is also positive. It's a slow moving stock, is what I can understand. The recently the move came from 380 level, now it's at 440 level. There can be a small minor profit booking. That can be an opportunity to re-enter the trade. I also believe that this can go back to 500 plus on the higher side. So Swiggy definitely, if there is some correction, I think we should take that as opportunity to take the long trades. Swiggy and even we are positive on the internet as well. I think even this, but comparing the both, I think Swiggy would give a much higher return.
Okay, fair point. I hope this has also helped all our viewers out identify the right strategies there. Anything else that's coming onto your radar from mid or small caps, maybe? Brijesh, if you could highlight for us, these spaces are also showing us some ticks on the higher end. What looks good here within the mid and small caps?
So GMDC is one I spoke about. I think Bharat Forge is something which is here, started to move from the medium small cap. So I think Bharat Forge will see a very strong momentum. Uh, Secondly, Ashok Leyland is something which is now coming up above the resistance zone. So it's a very clear breakout in Ashok Leyland. I think Ashok Leyland can go back to 145 levels from the current point. So Ashok Leyland is one thing which I will be having a watch. Last one is the Veraco Engineering. So this was up in the Friday session as well, and today also it is looking quite strong on chart. So that momentum kind of a trade will be there in Veraco Engineering as well. So yeah, so these are the trades.
Okay, fair point. I hope this has also given a lot of understanding to all our viewers as to how to go about this space as well. Let me also highlight for all our viewers who are looking at the IPO space as well, where to find the opportunity. So the current week, starting today, we will be actually seeing 10 new public issues for subscription, and 7 stocks are also scheduled to do their market debut, remember. So it's going to be a lot of action for this week for the primary market and the debut stocks too. Of the 10 IPOs, 3 offers are worth about 2,400 odd crore rupees. That will be from the main board segment. So we are clearly looking at the 3 IPOs that will be coming in. Of course, the biggest one of them all that we are looking on is Urban Company. The IPO size of 1,900 crore rupees with a fresh issue of 472 crore rupees that's coming in. So this is the one that a lot of households will also be very tuned to looking at it, because a lot of urban households use the services of Urban Company on an everyday basis. So there you have the consumer angle. Price band is 98 rupees to 103 rupees per share. So again, it comes to be optically on an affordable range is what people are looking at. Remember, the offer for sale stands at 1428 crore rupees. So this much money will only go to the existing selling shareholders. So keep that in mind as well. We'll also be looking at Srinagar House of Mangal Sutra, which manufactures and designs Mangal Sutra for several brands. That's also aiming to mobilize about 400 odd crore rupees with an entire fresh issue of 2.4 crore shares with a price band of 155 to 165 rupees per share. Let's also look at the third one that will be very important to watch out for, and that's Flexible Office Spaces. That's Dev Accelerator. That will be the third IPO from the main board segment, raising about 143 odd crore rupees with 2.3 crore shares at the upper band of about 56 rupees to 61 rupees per share. And the IPO again consists of a 100% fresh issue of shares. So those are the IPO basket of stocks that you should definitely be looking at in case you have an understanding and enthusiasm about the primary market space. But definitely wait up for the brokerage houses updates to come in, and of course from our top market experts for a guidance to come in to find out which are the stocks or these IPOs that will truly suit your portfolios as well. Brijesh, apart from the consumer space that we are talking about a lot, auto space, FMCG, consumer durables for that matter, these were the 3 pockets that were clearly in focus over the last couple of weeks because of the expectation on GST. Now that the finalization of the announcements has happened, we do know a date from which these will be implemented. A lot of companies have already started to come out and to display to viewers that yes, they are passing on the full benefit. So we are expecting a lot of buzz in the upcoming festive season as well. Looking at that, any top choice of stocks that you would bet on?
I think auto is the one space where we need to keep a watch on. Tata Motors, after a very long time, it has come out of this range. So I think there can be some positive sentiment can be seen. So Tata Motors, I think, can go back to 800 level. So slow and steady. I think Tata Motors, it is already a beaten down stock as an underperformer, but there is a opportunity in the Tata Motors. Ashok Leyland is something which we are very confident, which I already spoke about. So I think 145, 150 is what I'm looking for the Ashok Leyland. Specifically, I have maybe from not this test, but then I have a two stocks which are giving a breakout, and I think this can be one of the which the viewers should keep a watch on. One is the PNB Housing Finance is clearly giving a breakout at this 809 level. It's a very strong breakout, and I think this breakout should last during this week. So we can play for that 20 points in the PNB Housing. And CDSL is also, which was beaten down, is again moving up with showing some sign of reversal. So I think CDSL will go back to 1630, 1651. So PNB Housing, CDSL, Ashok Leyland. These are the few bets where I'll be having taking along.
Okay, fair point. Got that, Brijesh. Brijesh, let me also ask you on the sectors that have actually absolutely nothing to do with what has happened on the GST announcements also, to find out what exactly is to be done on those. Say names like defense, names like railways, they have again got into the back burner because the entire focus has been to drive up consumption and drive up demand there. How should one really look at those erstwhile favorite sectors now, defense and railways? Are they to be like, avoided for the time being?
No, I think railway, I'm not very sure how we plan it, but defense, we are having a view and very selected stocks like Bharat Dynamic and the Cochin Shipyard. These are the two stocks which we are having a watch on it. So I think there's always an opportunity in Cochin and BDL. So even though when the market, even when this sector is not contributing, this stocks, it's always advisable whenever there is a decent correction, one has to take a long term because we are expecting a bounce in the defense in the coming few months or something like that. But there's an opportunity. So Cochin and BDL is what will like to hold on the long lines.
Fair point. So I hope viewers you've noted that down as well. Let me also just highlight a few more pockets that one could look at. Okay, look at Tata Motors. It's consistently driving 3% higher at 712. Before we go ahead and discuss about some of the other stocks, just one clarity to all our viewers on Tata Motors is what I wanted, Brijesh. This has been a stock in 2024. We saw a lot of retail investors continue to start to bank big on Tata Motors, especially on its way up and while the time it reached its peak. Throughout 2025, we are already into the ninth month, right now. This stock has completely underperformed and stayed in a very narrow band of a range and only underperformed the markets and the entire segment there. Even now, when the GST benefits have come in, we are now seeing some pickup to take place. Of course, the benefits will come on. The key question here is how long before we see the erstwhile highs for Tata Motors? Will it still take a lot of time?
Uh, See, one thing which I can clearly make out from the charts is that the base for the Tata Motors is done. So the level of this 600 and 650, I think this level will not be, at least I'm pretty confident that this level will not be broken. And now the resistance on why I spoke about 800 because that was the level from where the earlier the selling came from. So I think there will be a pullback rally, and this may take the Tata Motors back to 800. So the near future, if this 800 is taken out and be a very strong closing, then I think there will be a very strong trend reversal, and then this can go back to 900 and 1000 level. See, fundamentally, maybe it is taking a little longer time. But somehow technically, I'm very convinced that the bottom is done for the stock. So the 600, 650 will stay there. And it will take a time, but I'm not sure how long this will take. But somebody who want to again want to bet on the Tata Motors, in the near future, this will be going back to 1000 plus level. So that is my directional view. But from a trading perspective, I think this can go back to close to 800. So that's a trading opportunity maybe for this series or maybe for the next series. There will be because see, once the numbers comes and once the December sales figure come after the Diwali announcement, I think the auto stocks will be something which will see a very good move on the highest. So we are positive on this sector, and I think Tata Motors will also do pretty good.
Okay, got that. I hope this has also given some sense to our viewers. Brijesh, now half an hour of the candle is already formed. Give us a sense on the technicals on the indices specifically. Now, Nifty Bank, how are you looking at that for the rest of the week as well?
I think the market is holding up. So I would, for me, I'm looking, as I say, I'm looking for the 25,000. But since first half an hour the candle is over, somebody want to take the long back. I think with today's low, I will be taking a long back, and with some decline. See, I'm keeping a watch on the this one, 24,800 call option, which is trading at 95. So I think this 90 to 75, this is a 10-15 points bank. I think that will be the area where I'll just re-enter the long bets. And with a stop loss of 40 or 45, I would like to take one long trade in the 24,800 call option. That is tomorrow's expiry. So closer to 80 or maybe 75, I will take the long trades. And with the stop loss of 40, 45, I believe once the market will, this Nifty will keep moving higher till tomorrow's session, and I think this call option, we might make some money.
Okay, fair point. All right. We have all the sectors, viewers, that are hovering higher in trade, led by autos and realty and metals today. Mid caps are also driving up positive. We are seeing even the market breadth improve at this point in time. But look at the stocks that are hovering higher. Tata Motors, Tata Steel, we already marked out. M&M, JSW Steel, Bajaj Auto, top 5 movers on the Nifty. On the declining end, you have life insurance names that have slipped. SBI Life, HDFC Life that have slipped in trade. Asian Paints, you have Nestle, you have Eternal, Bharti Airtel as the other stocks that are dragging. Let me come to the insurance basket with you. You're also looking at within the F&O pack, ICICI Pru Life also declining in trade. Brijesh Ji, we do know that for the end consumer, it's going to be beneficial because the health insurance premiums are going to see sharp downtake, and that could increase a lot of uptick for insurance within the country as well. But remains to be seen as to what could be the impact on the margins for a lot of these insurance players at this point in time, as they will have to, at least if not fully, but partly absorb some of the costs that they will have to let go because of the input tax credit. How are you looking at the insurance basket?
I think the long term perspective is positive because of that input tax credit. There can be a short term negative sentiment, so that can be an opportunity, is what I understand. Because from the long term perspective, this sector is going to do pretty well, and maybe not much. Specifically, ICICI approved whenever it comes to 550 zone, closer to 550 level. I think it's a very strong base. It doesn't look like it is going to see any very sharp sell-off from this level. So maybe in a very stagnant manner, both the HDFC Life is already holding up. It didn't correct with the way the ICICI was corrected. And the level of 700 is a very strong, decent support for the HDFC Life. So I believe whenever there is this minor corrections, we should take that opportunity to take the long trips, because in the long-term perspective, I think this stocks will do good.
Okay, fair point. All right, Brijesh, we'll leave you at that. Thank you so much for being with us in the morning edition and helping us with all your views across the markets, segments, sectors, key stocks to watch out for, where the opportunities lie, and of course, a trading strategy on the indices as well. Good to be speaking to you. Thank you so much for taking the time out. 24,828 viewers on the Nifty. 85 points of an uptick is what we see, at least for now. Sectorally, the action is pretty positive. Autos, realty, metals, those are the ones that are shining bright. Some gains, of course, across the board because all of them are hovering up. Remains to be seen whether throughout the course of the day we build up onto these gains or not. So stay tuned with us on to Business Today Television as we continue to track the markets for you throughout the course of the day. And in case you have some stock queries that you have about in your portfolio at this point in time, ask them at 12 noon on Daily Calls. I'll be back for that. Stay tuned. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shel Bhatnagar, and this is another wonderful edition of Market Masters.